Imagine if inflation wasn't just about central banks printing money or supply chains snarling up. What if it boiled down to human choices and power plays? In early 2025, global inflation still averages around 5.6%. Yet behind those numbers lie decisions by corporations and governments that rarely make headlines. We often hear about rate hikes and oil shocks, but in January 2025, the Federal Reserve paused after 11 rate increases, acknowledging that price pressures are shifting in unexpected ways. It's time to look below the surface to see why prices keep climbing. Today, we'll spotlight 4 hidden drivers: greedflation, war profiteering, moral decay, and elite rent-seeking. By pulling back the curtain on each, we'll understand why inflation lingers even when supply chains have mostly healed. Take greedflation. In Q1 2025, U.S. corporate profits still account for nearly half of inflation's rise, despite input costs dropping back to pre-pandemic levels. Companies, from food processors to tech firms, used last year's shortages as excuses to lock in permanently higher price tags. Across sectors, we see quiet coordination. When one airline or grocery chain nudges fares or milk prices up, competitors follow almost immediately. That silent competition leaves consumers stuck paying more, even though true costs have long since normalized. Next, war profiteering. Governments continue to fund global conflicts with newly printed money and sky-high bond sales. As the Ukraine war enters its 4th year, defense contractors and commodity traders are padding their margins, fueling price surges in energy and metal markets. Meanwhile, fresh tariffs on electric vehicles and rare earth imports, rolled out in March 2025, give companies cover to raise costs across their entire product lines, from batteries to consumer electronics. Then there's the moral dimension. When local bakeries or corner shops breach an unspoken fair price pact, raising bread or milk overnight, trust phrase. In spring 2025, surveys show consumer confidence dipping in 12 of 15 major economies, a sign that people feel betrayed by everyday sellers. As trust erodes, shoppers adjust to higher sticker prices, anchoring themselves to the new, inflated norm. This behavioral shift means each wave of hikes meets less resistance, cementing future price increases. And let's not forget inequality. While wage growth in 2025 barely keeps pace with headline inflation, asset holders see double-digit returns. Real estate and stock portfolios, up 8% so far this year, offer safe harbors, turning inflation into a stealth tax on renters and savers. Elite rent-seeking takes this further. Through lobbying and policy favors, well-connected firms secure subsidies or tax breaks that let them expand margins, even as working-class families struggle at the supermarket checkout. Human quirks make it worse. Anchoring bias and loss aversion help firms reset our sense of what's reasonable, while a culture obsessed with short-term gains normalizes every extra penny of profit over communal welfare. To tackle the real roots of inflation in 2025, we need more than higher rates. We need robust price gouging laws, transparent corporate reporting, and a renewed commitment to economic fairness. If you're ready to demand a system where prices reflect true costs, not unchecked greed, hit subscribe and join the conversation.